Hello, I'm David Cassidy with the market update. Today, Thursday, the 18th of June. Data from the US yesterday, Wednesday, the 17th of June, showed that Americans were looking at renovating or moving to a bigger, better home as mortgage applications rose to the highest level since 2009. Now, this is very positive news. Not only does it suggest that Americans are confident about their job prospects, but it also means that consumer spending will get a further boost as they buy new furniture and electrical appliances, etc., meaning that the impressive US retail sales data that we talked about yesterday should continue into the months ahead. And as the US consumer accounts for 2/3 of the US economy, it will obviously help the economy to quickly and strongly bounce back. However, today is all about the Bank of England's monetary policy meeting together with the weekly US jobless claims data. Everybody expected the Bank of England to increase stimulus given the current round of quantitative easing QE ends shortly. But given last week's GDP data reading showed the UK economy contracted by 20.4% in April, and yesterday's CPI inflation reading was well below the Bank of England's 2% target, speculation increased over whether policymakers would take interest rates negative. Consequently, news that policymakers voted unanimously to leave interest rates unchanged at 0.1% and only increase its QE programme by £100 billion was disappointing, especially as the QE programme will now stretch out to the end of this year. We had expected it to run just to the next meeting on Thursday the 6th of August and then increase further, coupled with the warning that there is a risk of higher and more persistent employment. As a result, the FTSE 100 index, which was trading effectively unchanged before the 12 noon announcement, is now trading down just under 1%. We will hear more from the Bank of England Governor Andrew Bailey later today, and if he says anything interesting or relevant, we will discuss this in tomorrow's commentary, along with the weekly US jobless claims data, which is due this afternoon. We are expecting both the initial and the continuing claims to decline as US states continue to lift lockdown restrictions and reopen their economies, allowing laid-off staff to be rehired.